Hi, and welcome to Two CPAs and the Mic, the podcast where we talk tax, finance, and all things related to business. Whether you're a business owner, working professional, or someone who wants to start a career in accounting, this is the podcast for you. Hosted by CCK Strategies partners Jeff Frable and Sara Mays, we dive into relevant business and tax matters with working professionals to make these topics less intimidating, relatable, and dare we say fun? Let's get down to business.
Welcome back to another episode of Two CPAs and the Mic. We are covering relevant business and tax topics. We're applying straight talk, maybe some unexpected humor, and practical information without the jargon and the stuffiness of your granddad's CPA. I think that's our new logo, right, Sara?
Yes, but maybe unexpected humor.
Maybe, because I don't want to think I'm funny.
I think we're funny.
I think we're funny too.
Yes.
But anyway, I mean, Christy doesn't, but she keeps us straight. Anyway, we are back in the studio.
Really glad this is not on video today.
Thank you, KP. We're back in the studio today. We are taking a banking angle today. We are going to be talking about economic conditions that are going on, the importance of a good banking relationship, especially if you are a small business owner. What are the things you should be considering? And then we're going to talk a little bit about a small business success story. So consistent
Say
with
that 3 times real fast.
It's Monday morning and I wasn't really working on the alliterations yet. So thank you, Sara, for pointing that out. I'm Jeff Frable. I'm a partner with CCK, have been so for 25 years. And my trusted cohort, Sara?
I'm Sara Mays, and I'm also a partner at CCK, and I've been with the firm 18 years.
And our in-house producer, the amazing KP, we call her KP, Christy. Hi, good morning.
Good morning, Christy Porter.
Good. So we have an amazing guest today. We are talking with Sean Kouplen. Sean is the president, CEO. Do I have that right?
And chairman.
Chairman.
Yes.
Everything.
Any other titles?
And everything at Regent Bank. I actually emailed Shelley over the weekend for your bio, and I was thinking about reading it, but I'm sure it's way long. Anybody who's anybody in Tulsa, Oklahoma knows Sean, knows his story and Regent Bank. But for me, we're friends. We're friends.
We've
had a good friendship for probably 25 years, which is a long time when you think about it. Sean is an amazing dad. He's got 3 great kids, an amazing wife. He basically has it all and has it all under wraps and has everything, right?
That's right. That's right. For purposes of this podcast. Yes, I do. Yes, I do.
But again, Sean and I have been friends for 25 years. He's really doing a great work over at Regent Bank. And Sean, just kind of give us a short bio of what you're up to these days.
Okay, I would love that. And I can't believe we're that old.
We are.
Golly, that's depressing.
Man, he said it,
So,
Jeff.
hi, everybody.
Not me this
My background, I grew up in Beggs, Oklahoma, a small town of about 1,000 people south of Tulsa. I thought I was going to be a rancher. My dad fired me with 1 semester remaining in college. I ended up in the banking business, was over-promoted my entire career, was a bank president or equivalent by the age of 24. When I was 34, we were able to buy Regent Bank, a small community bank in Nowata, Oklahoma. That small community bank has now grown into a couple $2 billion regional bank. We're in 7 markets, getting ready to go into Florida with a new acquisition that we are in the middle of. And so it has been very, very exciting. Jeff mentioned my family. Angela and I have been married for 26 years, about as long as we've known each other.
Yeah.
I have 3 kids. Emery, age 21. Oh, I got to think about this. We're always changing ages. Kennedy, age 18. Finley, age 15, and we definitely have a great life. So we'll talk about a lot more of this as we go.
Well, you should have done it like we had our kids 2 years apart, so it's always a 2-year difference, which makes it a lot easier when you're reeling off ages.
We're 3. We're
28, 26, and 24, so it just kind of, when it gets in the odd years, it gets a little bit more difficult, but it's something that's made it easy in our life. So, Sean, we're
You shouldn't
thrilled.
admit the math part when you're an accountant, Jeff.
Well, I can't do odds as well as I can do evens for some some strange reason. But
That's
Sean,
a problem.
you are a busy guy. We're very fortunate to have you today. And we just kind of wanted to start off. Again, KP kind of mentioned it, but we've got all kinds of listeners. Mm-hmm. We have prospective and current teammates. We have prospective and current clients, small business owners. Talk a little bit about what you're seeing from an economic condition perspective, from a banking perspective. What are your clients talking about, and what are their concerns?
So of all of the podcast questions today, this is the toughest one because it is really mixed. There is really a lot going on. There is a lot of change. And so let me kind of take our listeners through kind of a little bit of a chronology. So part of what has caused the kind of confusion and whiplash with people is we have seen drastic changes in interest rates, drastic changes in the market, drastic changes depending upon where you live. So let's kind of go through this. So back in March of 2020, the prime interest rate, which is kind of the rate that you charge to your best borrowers, bottomed out at 3.25%.
And what was March 2020?
Well, obviously that was COVID. And so it was, and obviously nobody knew what was going to happen during that time. It was very, very tenuous. And so one of the ways that the Fed tried to prop up the economy was to make money really, really, really cheap. Okay. So it stays that way until March of 22 when it starts to bump back up and it goes to 3.5. And then by July of 2023, it had come all the way back up to 8.5. And the reason I mention this is because that's the largest and fastest increase in interest rates ever in the history of our country. And so what that means is it impacts different people different ways. So now rates have come back down from that high of 8.5 to 7.5. And so let's think about kind of how that affects different people. So if you're a small business person, you've just had your interest rates go way down and all of a sudden way back up. And so you have an expense that you weren't expecting. If you're in commercial real estate, you probably locked in your real estate in very, very low rates. And so those loans are starting to mature and they are getting renewed at a rate that is double and sometimes triple what they had. If you're in the mortgage or real estate business, a lot of folks locked in the rate, like our mortgage rate is 2.75% on our home. So we're not going to sell. We're not going to move. So what that has done is that has really lowered the supply of new homes. Now, historically, where we are today is very healthy. Honestly, I've always thought that the best place for rates to be is for prime to be at 8. That allows us to pay depositors 4. Banks function on a gross margin, typically around 4%. And then you pay all the bills, and our net margin is around 1%, believe it or not. And so that allows savers to make a good return. That allows borrowers to be at a decent interest rate where they can function. So where we are right now is actually very healthy. It just seems so high because it was just 3%.
Because it was so low.
Because it was so low.
How long was it so low?
Well, for a couple of years.
I mean, well, even before March 2020.
You know, in March 2020, rates had been low for really probably 5 years. That's the lowest. 3.25 was the lowest they had ever been. But if you think about like mortgage rates from 1977 to 2008, the lowest you got was about 6%. You never saw. I remember thinking a 6% rate when I bought my first home
was a bargain.
A bargain.
Yeah.
It was a great rate, but then all of a sudden rates get down into the 2s in 2020 and 2021. And so now they're in the upper 6s and everybody thinks they're so high. They're really not. They're really right in line with history. It's just a little bit of whiplash from rates moving so much. The last thing I would mention economically is overall, credit is very strong. We don't have many past dues. Most banks don't. in the central U.S., where we are located and where all of our banks are located, is very strong because we're having crazy migration in from the coast.
Mm-hmm.
And so we're getting that additional lift as well. So I would say overall pretty strong, but you're just kind of dealing with this emotional whiplash of low rates, high rates, and that's probably the biggest issue.
So when those rates started to go up, was that a direct result of COVID and the money that was spent at a governmental level to compensate for that, or was it related to something else?
No, I thought my opinion would be that's exactly what it was related to. And you really can't blame the government. I know everybody says, we hate inflation and bad government for bringing inflation, but what are you going to do? I mean, at the time, it appeared that everything was going off of a big cliff, and so they're just trying to do everything they can to prop up the economy. So lower interest rates, put tons of government spending, tons of cash into the market. That resulted in inflation. And so the way that you fight inflation is you lower the supply of money by increasing interest rates. So that's basically what we've seen.
Yeah, and I would say that during that period of time, the thing that was a little bit different to me as an observer and being in an industry that deals with small business, in times past, there's been these economic stimulus to taxpayers, individuals. And the thing that I kept telling my family as we talked about these things is this is so bad that because usually like let's call it the wealthy get phased out of some of those things. This was a direct injection into the business of the United States from a perspective of the investors, those that are putting out money, putting out risk to keep people employed, to keep them going. And it was a direct injection into the businesses. And I thought that was very much needed. So obviously, when we have to pay for that, that's kind of a bigger chunk to pay off. So
it was called for those of you that may remember, it's called the Paycheck Protection Program. And it was wild. I mean, we did literally over $100 million of these, in essence, free loans to businesses to keep them employing people. And again, it worked. From that perspective, I mean, it kept the economy from tanking, but the problem is you had so much money go into the economy so quickly that's why we've seen so much inflation. Inflation is up 22% from 2020 to today. I mean, it is really a significant number. So when you take that and then you take all the newness of the Trump presidency, which is wild, and many people he's the savior, and many people think it's the worst thing to ever happen. So you're all along the spectrum, but tariffs, the immigration issues, DOGE, the Ukraine issue, I mean, all of this stuff just has, as you guys know, just a lot of change, and it's hard for people to assimilate all that.
When it starts accumulating, it's just like one thing after another, right. And then when something happens to the economy, it all just starts to get people worried more than anything else.
Hey, and my eggs are on the line here.
Very expensive.
Let's talk about eggs.
Literally and figuratively, right?
We need more chickens, everybody. Yes. We need chickens.
Well, Sean, you kind of alluded to it earlier in one of your comments, but talk a little bit about the banking industry and how does a bank work? How does a bank make money? What are their services that they do as we start to kind of lay the groundwork for understanding why banking is important and what our small business owners should be looking for?
So I bet banking is going to be different than what anybody out there thinks. Let me explain kind of how it works. It's actually very simple business, but different than what most people think. So we buy and sell money. Okay. It's very hard for my son's friends to understand that when you have a $2 billion bank that you own a chunk of, it's not your money. You don't have $2 billion. It's other people's money.
They think Finn sleeps in the cash vault, right? Is that
rich?
He's like,
rich.
rich. That's exactly. He's like, Dad, everybody thinks we're so rich and we're not. No, I guess because it's not our money. So the way that it works is you basically buy and sell money. Again, you operate on a 4% gross margin, basically a 1% net margin. So, and high leverage. So banks function on a 10% capital level, which just means that like when you go to the bank to borrow money, we require you typically to put down 20%. Okay, we'll loan you 80%. You put in 20. Not us. We only have to have 10% in the deal. So it's kind of highly leveraged, highly regulated because of FDIC insurance. So everybody wants, if a bank goes under, you want to make sure that FDIC covers your deposit so you don't lose your money, which is fantastic. But that brings with it a whole set of tremendous regulation. The challenge of the business, the business is very easy. You think about it, you don't have spoilage. Money is your inventory. You can always earn, whether you're loaning the money out, you can always earn money on the money that is in your bank. So the business is pretty simple. You're just trying to avoid credit loss. Because you're operating on such a tiny 1% margin, you can't afford to have very many loans go bad. You're trying to manage the myriad over 400 regulations that we're trying to follow at any given time. And you're trying to manage interest rate risk. So what has been so hard with these interest rates going up by 5% in 2 years? We've never seen it. We didn't expect it. We all thought it was going to be closer to 2%. And so that poses great problems whenever you're trying to manage that margin. And it has caused almost all of us to see a pretty big contraction in margin. But that's how banks work. We love to make loans. We love to bring in deposits, and we basically make the spread. You make a little bit of fee income from, loan origination fees or maintenance fees on accounts, or when people write hot checks, you make a little bit of income there. That's not really our game. We don't have a lot of that, but retail banks do. We have several lines of business. So we have banking, we have mortgage, we have insurance, we now have private wealth. And so we're trying to really build up a whole kind of financial solution organization for our clients.
So when you build that team, so it's almost like a one-stop shop from a financial perspective, financial services perspective. What are the things that you feel are important that either an individual or a small business owner needs to think about when choosing where they want to bank? Why is that a big deal?
You mentioned it, Jeff, at the beginning, but it kind of depends on whether you're a consumer or a small business. As a consumer, honestly, it's really a function of convenience, service, and technology. If you're comfortable and obviously rate, you want to make sure you're getting a competitive rate. But if you're happy with where the bank is located, their online presence, and you're getting good service, then you're really good to go. For a small business, it is much more about relationship. Because what we all know is we are in small businesses. CCK right. and Regent Bank are both small businesses, and you have ups and you have downs. That is just a fact, of small business. And so as a small business, in my opinion, your key has to be finding a bank that will stand by you. You want a good interest rate. You want to make sure you're not getting gouged on fees. But honestly, the market largely takes care of a lot of that. We're all competing with each other there. You just got to find somebody that is going to be in your corner when the inevitable challenge comes around. And that's really kind of what we pride ourselves on.
I was going to ask you to kind of elaborate on that, but what does it really mean to be in your corner or stand behind you? What does that mean to you and to Regent?
We see this almost every day where a business has been functioning very well and then something happens. Maybe they lose a big client, or they have a large receivable that they don't collect, or just something, something happens that was unexpected. And so these positive good numbers that they've been presenting to their banker for all these years all of a sudden turn negative. Okay. So the question becomes, what's the bank going to do? Our experience is that a larger mega bank that doesn't know that client is going to see that negative number and ask them to leave.
Mm-hmm.
And they're gonna basically turn their back on them because it's credit risk and they don't want a loan that's going to go bad and all of those types of things. Well, that's the worst time for a business to have to go find another bank is whenever they're coming off of a bad year. I mean, it's very, very unfair to that business. And as you can probably tell, this is a very big passion point of mine. It just drives me crazy when banks do this. Well, our experience is that a more local, community type organization that knows you, that your kids are going to school together, you're in Sunday school together, you have an emotional tie to that client, they're more likely to stick with you. And our probably Achilles heel is we may stick with people too long. I mean,
I can identify with that.
you just want to believe that they can turn, and you love them, and you don't ever want to see their business fail. And so, honestly, I mean, as long as the business is trying, we're trying. I mean, we will not turn our back on a business if they're doing their best.
Sean, I hear the heart of the bank when I hear you speak. And I love that because the value that you present it's true. Everything that you do is how you say. As you were talking about the diversification and all the new lines of services that you've brought on with expansion, with growth, it's exciting. It's celebration. But it also brings new challenges because you've got a whole new talent pool of people who you have to integrate into the heart of Regent. It's not an easy challenge.
No.
How's it been?
It's not an easy challenge, as you would say. So we'll hire 30 to 40 new people a year, typically on average. And all of our growth has been organic. So this upcoming acquisition will be our first. And so that's going to be a whole other issue. But even with the organic growth, what you're doing is you're bringing what we believe are kind of rock stars from other organizations. Well, they have their own way of doing things, and so probably the hardest thing to do. They're
Okay.
People.
Got it.
And so what we always kind of try to do is preach best practices. Often they have a better way of doing things than we do, but there are times when their culture has not matched ours. And so it's very important to us to try to bring them on board. And we do that just the same way you guys do, by focusing on, core values, by telling the story, talking about what is important, trying to give people plenty of empowerment to do their job, but always stay within the confines of these core values. But it is definitely not easy.
I don't know if you've experienced it, but we tend to see when we bring extraordinary talent in, we have to be really patient and give that individual what we call a little bit of detox time, because we talk about what we do here and living up to those core values, but they have to really believe it to see it. And it takes some time just to detox some of those past behaviors and patterns out.
Very much trust is one of those. A lot of people will come from an organization where they cannot trust the people that they have worked around. So they come in with this built-in shield and these behaviors that are not acceptable within our organization. And so we try to talk about these things up front, but you are right, Christy, sometimes it just takes some time. One of my top officers in the whole bank, it probably took 2 years for him to put away these old habits of a toxic culture, that he came from.
Sean, can you share with us some of those core values at Regent Bank? I know I've heard them over the last several years, but just kind of touch on them a little bit.
Yeah, this show you care is our foundational core value, and that's basically the whole no jerks allowed. and every industry has a sales function and a compliance function, and banking is 100% that way. And so there is kind of built-in conflict, but it's very important to us that even in moments of, I need to get this deal done tomorrow and we need to review it and make sure, and you're missing some documentation. Even in those moments, we have to treat each other with kindness. We have a whole set of, be a lifelong learner, bring your A game every day, have a sense of urgency, be truthful and transparent. It's just basically, how do we want to be? And I might mention this to your listeners, because I know you all have a lot of business owners. We chose those core values by listing our top employees. So what we did was we basically had an exercise where we said, everybody put down, we had about 100 employees at the time, who are the top 3? And we had a lot of overlap. A lot of us had the same people. And then we said, okay, what makes these people so special to us? And that's really how we came up with the core values. So they're very unique to us, and we really try to live those. We have a one warning. So if you break a core value, you basically get one warning, and then the second time you break it, you get alternate employment.
Oh, okay.
So that's kind of how we function.
And don't you have a communication requirement internally as far as returning emails and things of that nature?
We do. 24-hour rule.
24-hour.
And do we live this all the time?
We try to.
Externally, we do pretty good.
Yeah.
Internally is where we struggle.
Oh, so you're communicating with the client it's internally between teammates.
Yes, it's internally that we're constantly having to push, because they always feel the sense of urgency of the client, but not always their fellow coworker. But yeah, the 24-hour rule is our guarantee.
So we were talking before about the things that a small business owner should be asking about and inquiring about and dealing with when choosing a bank. And you came back and said the most important thing is the relationship. So the way I interpreted that and what I heard was the services between a community bank like yours and your big box bank are not overly significantly different.
Right.
It's the relationship that really makes the biggest difference when making a decision.
The perception of a client is often you can have one or the other. Okay, so you can either go to a local community bank and have this very intimate relationship, personalized relationship, but you have to give up all the tech. And then if I want the best tech, then I go to one of the big, Citi, Chase, Bank of America, Wells, one of the big dogs, but then I give up the relationship. And so my pitch, and we're not the only one like this, but my pitch is, you really can have both today. And the reason that you can is because the cost of technology has come down so much that there's just not a whole lot that you can get through one of the big dogs that you can't get through a community bank like ours. So the goal is to give you the whole enchilada, where you can have the best in technology, the best in personalized service, and an organization that really understands you, your business, and will stick with you through thick and thin.
I'm going to go back to, you made a comment about your relationship with your clients, and you were saying that, that you want an intimate relationship and you want that trust and building. But when a client is having a rough time, there's an embarrassment factor there. How do you get past that with that? Because a lot of people just, I'm embarrassed, I'm failing, I don't want you to know about my stuff, and then they start getting closed off. How do you break that barrier?
So that's barrier number one. Barrier number two is the loan officer that made that loan doesn't want to have made a bad loan.
Mm-hmm. Yep.
So you got to get through that one as well. And in both instances, the solution for us is the same, which is to tell them both, the quicker we know, the better we can help. The longer you wait to tell us what is going on, it's going to get so severe that there just isn't a whole lot that we can do. We are balancing, in banking, you're constantly balancing between the client and the regulator. Okay.
Right.
The regulators telling you don't go out on a limb for that client. We don't want to, put the FDIC insurance fund at risk and blah, 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 and the client's needing help. And so the earlier you can find out, the quicker you can help them. In an ideal world, we're meeting with our client every quarter. We're sitting down, we're getting current numbers. We are seeing what is happening sometimes before they are, and kind of going, okay, something's not really right here. Margin is deteriorating. Costs are going up. You're not in line with your peers. What's the situation? So ideally, we're on top of it, and we can even get there before they do.
That's good.
One of the most amazing things about Regent Bank in the last several years is, and you talk about regulation and the regulators and all that, is that Regent became a force to be reckoned with in the cannabis space in Oklahoma. And so you talk about a industry that's wrought with issues and the need to bring that all under wraps with regulation. Regent got out there and really took a proactive stance of dealing with the cannabis clients in the same way as you did your normal clients, right? With the continual reporting and things of that nature.
That's right. So people will often ask, we are a heavy faith-based organization,
right? And
we are the top cannabis bank in the state. And so often people will say, how do you reconcile those two? Well, just a quick background will kind of help the listeners to understand. So my sister-in-law, Carrie, has muscular dystrophy. And she was really struggling with pain and having a difficult time getting around. And she was a big executive out in San Francisco. Her job moved, and so she ended up moving home so we could kind of help take care of her. Well, she ended up doing a project for the bank, and she was bored at home, and so we had her kind of work on some projects. And she had gone into a pharmacy to get these cannabis drops, which really helped her pain, which were life changers for her. And she said, this pharmacy, nobody will open their bank account because they have these cannabis products. And I was like, really? And she said, yeah. She said, in fact, there's a lot of businesses that can't get bank accounts now because they're in the cannabis business. So I said, well, why don't you study and see what it would take for us to help those businesses? So that's really how it began. Now, we didn't vote in medical marijuana legalization here in Oklahoma. Okay. Honestly, I did not vote for it, but the citizens voted 70% to vote it in. The beauty of banking them is it makes it legitimate.
Right.
So every transaction gets run through a system which makes sure that they have their medical card, that they're all, as legitimate as possible. And so honestly, it's the best thing for the industry is for them to have banking. So that's kind of how we got into that. We've never had any regulatory issues at all. Not one finding ever in the cannabis sector, and it has led to super great relationships, wonderful people. It's a very, very different industry than what people think it is.
It is, and the I don't know if Carrie is still leading that, but she was an amazing representative of the bank and dealing with those that sector and those clients, and her attention to detail and her background made her the perfect person to do all that work. So
well, I know she loves partnering with CCK. You guys are very good in that space as well. And it has actually been really a neat. It's been very good for the bank, but it's been very good for the customers. I mean, it's allowed that they needed banking. Otherwise, they were all functioning out of, cash. And that's very dangerous. And I mean, there's all kinds of problems with that. So it's been really good.
Yeah. Well, let's go back and talk about the relationship again, because that is so important with a small business owner. And I would imagine that you don't just develop those relationships by turning on and off a personality. So it goes back to the culture inside Regent. And so just speak a little bit about the Regent culture and what you have done to get that in place and what you do to keep it in place.
First of all, Jeff, when you're a small and mid-sized business, what you're really trying to do, you really just need to find the right fit for you. Okay. And what you need to do is just ask banks what their niches are. Like we are unique. We're really a business bank, and we have niches in cannabis, as you mentioned, but SBA lending, we have a nonprofit division. We do Hispanic banking. We have a specialized healthcare division. And our lending limit is now about $40 million. And so we've grown to a point where we can handle 97% of the businesses in the market. You just got to find what is the bank that is the best at what I do. Okay. Now, in terms of us and our culture is very unique in that it has grown to become, as I mentioned earlier, very faith-based. Now, this doesn't mean a particular faith. So, I mean, we always say, we have a purpose statement that is to show God's love to our employees, clients, and communities. We have a daily devotional. We have a prayer team. We have faith in business events in all of our markets. We have faith-based book club. We have a chaplain, and we started the 94X Faith at Work movement. All of those are really kind of Christian faith movements, okay? And that's kind of the basis of who we are. However, we have a lot of employees who do not have that belief. They have a different faith, or they have no faith, right. And that is okay as well. We're not trying to force it on anybody, but what we have learned is it is perfectly legal to offer those types of things. And the net result is a culture which is very, very caring, very, very loving. We care about you as a person. We want to pray for you. We want to know how you are doing as an individual, not just as a means to help us have another record year.
Turn a profit.
Yeah,
right.
Turn a profit. And so it's been the game changer of my life to see what that could really look like within a business.
How are you going to transition that into a whole other state?
Yeah, it's interesting. So again, number one, thankfully, the group we are buying is also heavily faith-based. So one of the things that drew us together was their primary organizer, kind of the Sean of their group, is a very, very strong believer. And honestly, they do some things that are even kind of cooler than what we do. So I think we're going to be able to bring all those together. But thankfully, they feel the same way. So, again, even in like North Texas, so we're in Frisco and Dallas, and we're actually in an area there that is heavily Muslim. So the location where our bank is actually in a largely Buddhist and Muslim kind of neighborhood. And many people have asked us, how's that going to work? Well, we love those people too.
Yes, absolutely.
I mean, we don't baptize in the middle of the lobby. We're not anointing anybody's heads with oil. I mean, we're not. So what it really feels like, it truly is just love. In fact, this just happened about a month ago. We were in our new employee luncheon, and we probably had 20 people in there, and I was meeting them for the first time, and one of our employees said they were telling their story, and one of the ladies said, I just have to tell you guys, I have been working for 34 years, and this is the first place I've ever worked where I have felt loved. Okay? And the lady next to her said, well, I will one-up you. I've been alive 57 years, and this is the first time in my life where I have felt loved.
Wow.
That's the name of the game.
Right.
It's not religion. It is to show God's love to our employees, clients, and communities. If you want to have in our shop, if you want to have a study of the Quran, you can have a study of the Quran. If you want to have a study of the Torah, you can have a study of the Torah. It's all open. You just invite people in to attend. We don't require anybody to do anything. So it's really magical. It's kind of hard to verbalize it until you've experienced it. But what we have seen through 94X is tons and tons of businesses taking this step, and all of them find that it's almost like it just opens up. It's kind of like your culture here. It's like it just kind of opens up a whole new world of work and what work can actually be like.
Right.
Very cool.
Right. Well, Sean, we've talked a lot about the bank and just the things that you're doing there and the progress and the growth that you've seen. Talk a little bit about Sean the person, Sean the business owner, for any business owners that we may have that are listening. Just kind of give us a high level overview, because I know Regent didn't start off perfect.
Well,
but talk a little bit about the ups and downs of being a small business owner and being a dad and being a husband while you're trying to grow something. What do you have to share with people today about that?
Well, Jeff and I have been friends so long that he's walked with me through all of this. And so he knows a lot more than most. When we purchased the bank, it was literally at the worst time in the history of mankind. That has actually been proven by an Oklahoma City University professor that I could not have bought the bank at a worse time. April Fool's Day of 2008 was when we bought the bank. So immediately we go into this mortgage crisis in the 08, 9, and 10 timeframe. And it was very, very, very difficult. I mean, some of the darkest times of my life. We had a miracle in the spring of 2009. We probably should not still be in business, except that the Lord took care of us, which frankly was kind of what led me to turn the bank over to him, because frankly, without him, I would be out here picking up trash on the side of the road. So that was the low point. Obviously now it's very, very different. I mean, we're hiring all these people, opening up these locations, we'll grow more in a month than we were total when we bought the bank. I mean, it just is kind of mind-boggling today. So the challenge now, back then it was survival. Now it is managing very rapid growth and how to do that and balance being a husband and a dad. And, for me, and Jeff knows this, but for those that are listening, you just really have to set boundaries. I mean, there are just certain things that I just don't do. I never, except for this podcast, take a meeting before 10 a.m. So I get most of my work done in the morning, and I came in a little earlier this morning just to get everything done that I needed to get done. I never work after 6:30. My phone is literally turned off, plugged in, so you're not going to get me after 6:30. I'm never, and this goes for all of our employees. We never miss a kids event, no matter what. Ever. That's very, very important to me. And you just kind of try to prioritize the best that you can within those parameters. I have a phenomenal team, great executive assistant, a very understanding wife. Mm-hmm. And so all those things go into it together. And then the last thing I would say is probably the importance of delegating. I've always said you can either grow something or you can control it, but you cannot do both. And so thankfully I am made as a master delegator. I just have no issue with giving up responsibility. I have maybe an unhealthy trust in people, but thankfully 99.9% of the time that works out well. And it has allowed us to scale because everybody's taken on their piece of the work. It's not just me trying to make all of the decisions. So I think all of that goes into it. It is a day by day challenge.
Sometimes moment by moment, depending on the day that you're encountering, I would imagine. But, you mentioned you have a very supportive wife. She is someone that's very busy herself. So you guys have a crazy household.
My wife is an executive with One Gas. She's head of HR. They're on their executive team, sits on a publicly traded board. She is amazing. She has crazy capacity. I know we're in here with a couple of ladies that are the same way. Women are just better than men. I'm just going to say it. It is.
Thank you for admitting that.
It is. I will admit it. It is crazy what she can balance. She's got all the kids stuff, and I mean, I'm kind of a slacker compared to her. But for example, and this is something I would encourage everybody to think about. We are big outsourcers. Okay, so I mean, we look at you're going to give up some things. So we both have big jobs. So we have good income. And so we want to spend time with our kids. So we outsource everything. I mean, we have somebody that helps us out around the house. We have somebody that mows the yard. We have somebody that does the laundry, takes care of the pool. I mean, I think it's important to figure out, okay, we could save some money by not doing those things, but then we'd just be doing those things when we really in the evenings want to be looking in the faces of our kids and seeing how their days are and talking to each other and seeing how our days are. And so that's kind of how we try to balance all that.
Well, it's funny that you mentioned that, the things you spend your money on, because that's one of the things that I talk about when I talk about the value that we bring our clients is either tangible or intangible. The tangible value is you were reporting a certain way and you paid X. We're going to change it and now it's Y, and the difference is your tangible value. But the subjective intangible value is, I always joke about, I realize that every fall how important that is and how great it is because I'm doing my own stuff, doing my own tax returns. And for our business clients to just say, hey, take care of this. I'm going to spend time with my family on the weekend is a huge value. So it's fun to hear you say that.
Yeah.
I love hearing about your power of delegation because I think a lot of times business owners really do lean into their own understanding, their own expertise. And it takes a high level of courage and trust. You've said trust, and that's my biggest takeaway from what you have said in throughout the podcast. It takes a lot of courage to take a risk, and I'm going to trust this person. I'm going to trust this person, and maybe they haven't completely earned it, but we're going to give them the benefit of the doubt because we've surrounded ourselves with people that we know who are capable and they're loved. And so we're going to lean in. It takes a lot of courage.
It does.
I think that's what a lot of our listeners can take away, that to feel whole, we have to surround ourselves.
Well, I would remind all of the listeners today that somebody had to take a chance on you. At some point, there was a point in your career when you didn't know it all either, and somebody believed in you and gave you that shot. And we need to do the same thing. There's a strategic coach concept. It's called going from rugged individualism, where we feel like we know it all. We have to know everything. We have to have all the answers, to unique teamwork, which is where I do what I'm best at. Okay. I mean, there's certain things. I am actually a pretty horrible banker. I mean, in terms of credit and compliance and all the stuff the CFO does, I hate all that stuff. There isn't anything, but I love relationships and growth and marketing and strategy and culture. So I do that. And then I hire people that are really good to do the other and let them do their job. I mean, it is hard, but once you do it, you would never go back.
Right.
Yeah.
Once you find your sweet spot, you know it.
For sure.
You absolutely know it.
Well, the other thing, Sean, that you've brought to light is that people are people. It doesn't matter if you're a CPA, a banker, insurance, financial advising, whatever. I think most people want the relationship. They want to feel cared for. Now, you do have some that are just strictly
price
and transactional but there's a lot of people out there that just want to feel cared for. They don't want to feel like a number. Uh-huh. And we've talked many times about my identity and my background and my strengths, and we're kind of in the same boat. I don't particularly care to be strategic all the time, but I do like to be in relationship all the time. Exactly. And so, but people are people, and it doesn't matter what you do. They just want to feel cared for. So,
what's interesting, our organizations are very, very similar. It's part of what's always drawn me to CCK. And so, and I know there's a lot of business leaders that listen to this podcast, and I really want to encourage you to think about relationship ahead of always saving that last penny, because I've seen that our clients that have moved to CCK have been so much happier. We've had clients on the banking front that have left to go to another institution for 0.25%, interest rate. And then things got tough, and here they come back, because that organization did not have their back or didn't give them any value, or they couldn't even get a call back. I mean, there's much more into business than just trying to get the last penny, in every negotiation. I really encourage you to think about that.
Yeah.
Well, with that, we will wrap up and end on those wise words from Sean Kouplen. Sean, thank you for joining us today.
My pleasure.
We learned a lot about the current economy, the conditions, but maybe even more so, what do you do in these times of uncertainty? Who do you have in your corner? It all tends to go back to relationship, and you want someone there that's going to care for you and take care of you, whether that's a bank, a CPA firm, a financial advisor, an insurance broker, or whatever kind of personal service you deal with. So thank you for joining us. If you have any comments that you want to leave us or just check in with us in some way, shape, or form, Sara, what's that email address?
It is podcast@cckcpa.com.
We love emails.
Yes.
Yeah, Sara loves them. So send them to us.
Yes.
Send the negative ones to Christy. She'll make sure we're...
Bring them all. We love to talk.
Yes.
You never know where a conversation will take us.
That's right.
We, as a firm, we just went through a net promoter score engagement, which we will talk about on a future podcast. And we got some of those comments that told us where we were falling short, and we just need to deal with them and take care of our people. It's a caring profession. So email us podcast@cckcpa.com. Thanks to CCK, our sponsor, for taking care of us and for seeing the vision of this podcast. To KP, thank you for keeping us on track. Robert Mays for his intro and outro music, and Clarence Fisher with Tulsa Internet Marketing Services, our wise podcast sage, and then Lee Dollenberg, our IT guru. Thanks for keeping us on the air. Join us next time when these two CPAs get on in the room to talk about relevant business and tax topics, and you can find out who's on the mic.
The information provided on this podcast is for general informational and educational purposes only and does not constitute accounting, tax, legal, or financial advice. While we strive to provide accurate and up-to-date information, laws and regulations change and individual circumstances vary. Always consult with a qualified CPA or professional advisor before making any financial or business decisions. The views expressed by the hosts and guests are their own and do not necessarily reflect the opinions of any organizations they are affiliated with. Listening to this podcast does not create a client-accountant relationship. By listening to this podcast, you acknowledge and agree to those terms. And that's a wrap for this episode of Two CPAs in the Mic. If you found today's episode helpful, please subscribe, share, and leave us a review. Have questions or ideas for a topic? Reach out. We'd love to hear from you. Email us at podcast@cckcpa.com.